Mortgage forbearance. So what are we in for real estate-wise when mortgage forbearance ends? In this video, I'll be digging deep to explain why the consequences once predicted by the experts may not come to fruition. Stay tuned, you'll see. I'm Kiwi. This is Kiwi the Coast, your luxury real estate specialist, helping you maximize and sell the value of your coastal home. Now, if you're new to the channel, don't forget to subscribe, and let's dive in. So to understand what the possible effects of mortgage forbearance ending is going to have on the real estate market, we first got to understand what is mortgage forbearance. Well, this is when a lender or a mortgage servicer allows the loan payments to be reduced, paused, or modified for a temporary period of time until the borrower can get back on his feet. And of course, Section 4022 of the CARE Act basically allows federally backed mortgages to be modified in this way when the borrower can attest that he's experienced some hardship due to COVID-19. So here are the 5 reasons why the end of forbearance may not have the dire consequences that the experts once predicted. Number 1, hey, the economy has been improving. People have been getting jobs back. Now, there's still a lot of people out of work, but those folks that have returned to the workforce have been able to make their payments and so have been able to exit the forbearance earlier than predicted. So number 2 is loans in forbearance is decreasing, not increasing. Now, the experts tell us that to have a risk of a real estate crash, we need to have loans in forbearance increasing by 40 or 50%. And this is just not happening. Now, our friends at Black Knight just came out with a report that the number of loans in forbearance has actually decreased 18% to a number way less than 3 million. So you can see the risk has diminished, not increased. Number 3, home equity. And home equity for most borrowers out there has improved and has been very, very healthy. Look, if we look in the past 8 years, that equity position for most homeowners has continued to grow. Okay, and of course in 2020, in a seller's market, the equity position has got even better, for the risk much lower. Now, for the borrowers out there who have not financially recovered, and we know there's plenty of them, they've got many options today. Look, they can recast their loans, they can do the forbearance, of course, they can extend the forbearance program for up to 6 months, and at the worst case scenario with equity in their home, they can put the home on the market and get it sold and pocket that equity. In fact, according to one of our very good local lenders, many of the small business owners or self-employed, like doctors, dentists, even law firms, took advantage of forbearance back in March and April as a sort of insurance against the uncertainty that was existing. You know, they had people on payroll, they had fixed costs, so they needed to make sure they could cover those. And of course, they haven't had to use it, and they're out of that forbearance program now. Number 4, shadow inventory. Back in 2012, the housing bears out there were maintaining that between 4 and 5 million homes was contained in the bank's portfolio as shadow inventory. People love to compare the shadow inventory with loans in forbearance, and of course that is not the case. A loan in forbearance is not in foreclosure. And as we mentioned, many of those loans in forbearance are not now distressed. Anyway, back in 2012, the housing bears predicted that when that shadow inventory hit the market, the real estate market would collapse. And we know that didn't happen. Why? Because demand picked up and those homes were absorbed. So to keep it simple, even if we do have some homes that come on the market out of forbearance, we have the low supply to absorb it. And that brings me to number 5, low supply. Frankly, we need some more inventory in the market today. We've got such low supply with our sellers market that having some homes coming out of forbearance onto the market will stimulate buyer activity, allow those buyers to jump on those low interest rates, close and absorb those homes. So you can see that we're not in for that real estate collapse that all of those naysayers predict. So I hope you found all that information valuable.
Now it's time for the Kiwi Squeeze.
This is where I ask you for the juice. So, have any of you been in the forbearance program, and what has your experience been? Do share, comment down below, and I just can't wait to read your responses. All right guys, continue your real estate education here. Tap or click on the videos. We got a great series for you. We're gonna sell your home for more in less time, and I'm gonna help you do it. And we'll see you on the next video. Vroom.